The fastest and the easiest way for you to become a six-figure-a-year trader comes down to just one specific thing, and that thing is execution. It's the only thing that stands in your way of you getting everything that you want or you giving up everything that you have. And if you're using a trading strategy right now that's focused too much on pattern recognition and not enough on execution, you're already walking down a path of financial destruction. You just don't know it yet. But I don't want you to worry about that, because in today's video, I am going to show you the easiest way that you can figure this out with a formula that is called the two-step candle. This formula will simplify the overwhelming and confusing universe of technical analysis and condense it down into just two actionable candlestick signals. Two signals that are so powerful, you could spend the rest of your life comfortably pulling profits from the market at will without ever having to do anything else, because that's exactly what I've been able to do. Over the last 18 years, I've been able to achieve everything I've wanted to financially on just these two candlestick signals. And today, I'm going to show them to you. And to make this as easy as I possibly can, that way you can take this formula right away and start making money with it, I've broken this video down into just 4 easy to follow steps. We're going to begin with step number 1, where I'll discuss everything that you need to know about these candlesticks, and you'll see why it's going to make you a much better trader. In step number 2, I'm going to talk about everything you need to know from how you're going to enter, where you're going to exit, what kind of profit expectations you can have, and where you're going to manage your risk. All that can be covered with this two-step candle formula. In step number 3, I want to share with you something I call the secret key, because if you add this to the two-step candle formula, you're going to see an amazing improvement in the quality of trades that you make. And of course, step number 4, which will be everyone's favorite, real live trades in a market using real money. That way you'll know by that time how this thing is going to take you to that next level as a trader. And I want everybody to know this who's ever watching. Any market, any asset class, any time frame, it does not matter. Cut and paste the formula and put it into what you're trading, and I promise you are going to see an improvement immediately in your trading results. So let's start with step number 1. So on your screen, let me introduce you to the first of the candles we'll be talking about today. And this is something I've called over the years, the power of the towers. Now, I know a lot of you watching this right now who've done any kind of trading have seen these candlesticks appear somewhere on your charts. And there's a lot of you that understand the meaning of these, and you may refer to them as engulfing candles, which is great because they are engulfing candles. And I think the true Japanese technical definition, if memory serves me correctly, which it doesn't, and if my pronunciation is good, which it probably isn't, is the Marabuzzo brothers. But here's the thing, guys. It does not matter what we call them. We must understand the significance in all technical analysis forms. Significance equals confidence equals money. That's what we're in the game for. So to make sure we're all on the same page, let me explain these. And I'm going to show you something that you probably never known about these candles. You certainly won't look at them the same way again. So if you see the green bar first and the red bar second, this is something that's referred to as a bearish engulfing, bearish reversal, bearish power tower. Inverse relationship, if it's red first, green second, this is a bullish engulfing, bullish reversal, or a bullish power of tower. Any one of those are fine. Here's why I like the power of towers. Because I am looking for the most robust, huge towers to appear. Because the bigger the tower, the more significance. It represents the largest shift in sentiment. And you're going to realize here in a second, it's all by design. And I like to use the tower because that's what I want to see. If it's smaller candles that are back to back like this or medium size, they don't bear the same significance. That's where the confidence comes from. When you see this, and I'll show it to you in a live market, it has a whole entire different meaning. Now, here's something I want to explain to you that might be a touch more advanced, but if you can connect the dots here, life changes as far as a trader. I'm going to tell you why this happens in the first place. Because when you see this, what you must understand, it's a brief moment in time, whether you're trading a 1 minute, 5 minute, 1 hour, 4 hour, or a daily. It's a moment in time where emotional buyers meet technical sellers. Or in other words, rookies meet pros. So let's talk about the bullish candle first. the moment, what actually got this candle started in the first place was this asset was most likely rallying. Short sellers got stopped out at very early prices, maybe at a technical breakout. And then buyers came in on breakouts. And as it extended, FOMO and emotion took over. And as I said, emotion is the abandonment of intellect. And people start smacking buttons because, oh my God, I'm going to miss this trade. And that's it. The technical sellers come in. That move creates the volume and liquidity necessary for the large institutions to get out of their trades and vice versa. That's why it works, because it's engineered in the first place, and the emotion is what allows this thing to happen. The other candlestick we'll talk about, which bears the exact same significance, is something I recently done a video on, which is my personal favorite, is the John Wick. Same significance. The difference being is that the John Wick, the bar never got a chance to finish. And I know you know these hammers and inverted hammer signals. But they're very, very important because it represents it's even more aggressive, because at that moment in time, the market was so intense with buying, they wouldn't even let the candle finish, or they were so intense with selling, they wouldn't even let that candle finish out before everybody started hammering it down as a seal. That's why it's called a hammer. These are the only two candlesticks formations that I've traded in 18 years. I'm not kidding. And I'll show you what I'm talking about here live on a chart. This is a 5-minute intraday chart. Again, it doesn't matter if it's 1 hour, 4 hour daily. It's all the same. Just apply the same thinking. And I want to show you this. You might see it already. Let's just focus on these upward impulses in this chart, these short-term temporary rallies, okay? If you start from this one here and you retrace that back to its origin, where that whole thing began, you're going to see it was right there. Or even you could say it's possibly right here. If you take a look at this rally, you trace it back to the origin, it's right there. And if you take this rally and trace it back to the origin, it's right there. Hopefully, you see exactly what you need to see right now. Every single one of these started from a wick or a power tower formation. There is none other. And if you look at any reversal, they all came from that. That's the point. It's engineered in the first place. That's what you need to be looking for. And this is better for all of us who are trying to make money trading. We need to figure all of this out down here, not up here. Because once the remainder of the retail traders caught on, you're too late. You're going to get sold into. Now also take a look at this. Every single sell-off created from the same thing. Power of tower, power of tower, power of tower. All of them marked a top in that for the short term. Let me show you how we're going to enter something like this and go from there. So there's two different types of entries here. I don't know if I brought this up. If I did, my apologies. But I want to make sure, because you'll often hear me say technical analysis is not literal. I made a few drawings here that oftentimes, especially if you're using a 1 minute or a 5 minute chart, the bars may be separated by another red bar, even 2 to 3 or something like that. Don't let that discourage you from the trade. The significance is still the same, but oftentimes markets with noise, especially on smaller charts, there's often a few bars that are separating them. You may have seen that live there on the chart. So I don't want that to be a deterrent. It means absolutely nothing as long as the base of that candlestick holds. So back to the power of tower. Entry, very, very simple. There are two different kinds, but there's only one I have on the power of tower, two that I have on the John Wick. So if I see this candle first, simple entry. All I want to see is about 30 to 50% of this green candle get taken out, and that becomes my entry, and my stop loss is here, 30 to 50%. If it passes the 50% threshold, I don't want the trade. I've missed it. Now, this 30 to 50% is not measured via a ruler. I don't use a Fibonacci tool or any kind of measurement device with an indicator. It's an eyeball. All I need to see is that those technical sellers are ready to pound on the emotional buyers. And if you retrace 30% of that, it causes a snowball effect where those late chasers stop out, The people who have some profits panic and take the small gain, and they all get blown out at one time. That's the point. That's enough for me to see. And if I can get into it early, best part, number one with all, is risk. My risk is low as it possibly can be. And also because technical analysis often has flaws to it. If it's a fake or a shakeout, because sometimes you go, what about if it shakes out? What if it's a fake? I can get out with some profits. Inverse relationship to the other side. 30 to 50% is the entry, stop is below, and we'll talk about targets here in just a second. Now, the John Wick is a little bit different, and one of the reasons I like it so much is there's two entries that can be made from a John Wick. I do the same thing on the first bar. So if this one is getting very aggressive and it's full-bodied red, I'm looking for it to retrace 30 to 50%. That becomes the entry. The stop is here. Now, there is a secondary entry that can be made with the John Wick, which is the next bar, whatever time frame you're looking at. If that next bar takes out the top of the John Wick bar, that can be your entry, okay? Now, in most cases, as much as you can, it would pay to have your stop loss at that low of the candle because this represents the biggest buyer, okay? And that's where you'd want to be under that big liquidity area, under the big buyer. But look, again, markets are dynamic. You have to make changes. In fast-moving markets, you may not get that chance. So oftentimes you can pull the stop a little tighter underneath of that second green bar. And that's only if the distance between those two are too big in terms of risk. You're going to lose too much money in that, okay? Then you have to make an adjustment or you have to trade something else. Now let's go ahead and take a look at this on charts as well. And now I want to just talk about the targets real quick because they're very simple. And one tip I'll give everybody, if I can, is the weird thing about targets and stops is we kind of use technicals to get in, but then we use emotions to get out. Just remember, if you're using technicals to get in, use technicals to get out. And the purpose of that move is it should go back and retrace all of the mess that it just created. That's the point. So for example, going back to the NASDAQ chart right here, if you're entering here, for example, the target is just retracing the steps on whatever time frame you're looking. Look for the upper pivots starting from your left and moving farther left, right? That would be step 1 here, step 2 here. And for step 3, you'd want to look back here a little bit deeper into the chart. If you entered here, it would be the same thing. Target number 1 would be trying to get back up into this pivot and possibly getting back up to this pivot for number 2. In this one, it would be number 1, the top of this clustered area up to this area would be number 2. So just want to make sure everybody sees those targets. Just go back to the tips of the clustered area, the last clustered area or the last pivots, but just use those for focused areas. Hopefully that makes sense. So this will be step number 3, which is the secret key. And when you combine this with what I just showed you, everything gets a whole lot better. In fact, what I'm going to show you now should be a staple in everybody's trading, no matter what you trade. Whether you like what I shared with you today, you can't stand it, you're trading some other strategy. There are really only a couple of spots when you see a chart that you should execute. I mean, that's been the whole philosophy of the video. The 90% of the stuff you're seeing on a day-to-day basis is noise. There's only a few executable candles and there's only a few executable spots. Let's take a look at NVIDIA right here, 5-minute chart. You'll see the gray area is the pre-market trading session. Just want to make sure everybody knows that. This dark and black area is the official market hours. But let's just look at a few of these rallies where we could have entered based off of our John Wick or Power Tower. Here would have been a good one right here at this spot. You got a good 30% retracement. You dipped in here early and then you rallied all the way back up here. Now you'll see once you got back up here, this was a Power Tower. A 30%er right there would have been a great entry with a stop above. And it trades right back down and you get another one here, okay? And then you have the same thing, another Power Tower right here, 30%, followed by an even deeper drop right here. Now there's a couple noisy candles in there, but let me just discuss the bottom parts of this first. There's a reason that this candlestick showed up right here, right? And you see there's a few other times for the rest of the day it showed up at that same spot. And that's because it is support from a pre-market. Now, I know most of you know about support and resistance, but if we back this out, you'll see a lot of that just came right back into that liquidity zone and the wick showed up. So here's the thing. You don't want to rush in and buy that early because it's probably going to come back into that zone before it finds its way higher. There's an old saying that nothing can go up until the masses have been stopped out. And the majority of those moves happen at the open. If you remember the check mark, you remember the box theory, you remember the measured move, the recent video of the 4-hour chart overnight. All of those concepts are focused around the same thinking, is that what you're going to do is flush on the people that can't control their emotions early, and you're going to test those lower areas of liquidity. But big funds and institutions use too much size, and there's only a few spots on the chart that they can get in and out. And they never chase anything green and never sell anything red. That's how the whole system has worked since the beginning of time. It's the retail traders that chase the greens and sell on the reds, if that makes sense. And you see it here. This is not bearish. This sell-off is just a scalp short. It's not bearish. It's just to get the early chasers out, create the liquidity, and buy it back again. And you'll see even once it this is actually a sucker move right here. It blew through the low, but if you take a look, it just revisited that pre-market low again. That's all it did. Here, 95% of the trading population didn't know that's what's going to happen next. Only those that realize those wicks here would see that, and you will see that the more that you trade. Now I can fast forward it here to another day. There's the overnight session. The following day was the same thing. Take a look at this wick right here, right from the open. This looks like a disastrous flush, right? But look where this wick showed up, right there. So guys, I want you to do something always. Look left. That will answer your questions. If you want to know how that happens, start right here and go back this way, and there's your culprit. There's your culprit right there. So the key for step number 3 is you only want to execute this candle at either the top of that range here at the resistance or down at the deepest spots. If you're trading in here, this was the box theory, if you're jammed in the center, you're going to get fakes. That's where all of the shenanigans, the fake trades, the rest of this, all this I would say right here is noise. Yeah, you had some upward moves. Yes, you could scalp some trades, but the thing, it will be the accuracy. Your accuracy won't be that good. So make sure when you use either the John Wick or the Power of Towers, that's combined with some level. Now we're going to move to step 4. I'll show you live trades and we'll rehearse this from the top-down approach from start to finish. That way you'll see all of these previous 3 steps come into play as we make trades and how we manage them from there. So take a look at this Palantir 5-minute chart. Market opens. First thing you see is this very, very aggressive dump. So going back to the lesson, we know we have emotional sellers. All we're looking for here, technical buyers. So where would those technical buyers be? Because this thing is really, really getting aggressive, and I'm sure you've seen these moves. Here's what I want to draw your attention to. You can't just buy that falling knife just because it's down a lot. You have to look for the proper area. And I want to show you something here on the daily. Not sure it's going to line up, but let's see. This is the daily chart right here of Palantir. Let's take a look at these based support zones, right? And let's just block that out. And I'm going to box it just like this. And if I can get an entry or I can see a wick develop in this area, that's going to trigger this trade to the long side. And then we're going to look to retrace a good chunk of this, probably somewhere back up into that range right there for reference. See how, if you can see here real close, the green is coming into play, not the green, I'm sorry, the gray box coming into play. Let's see if this bounces here. I want to open this up because we're very, very close. Remember, technical analysis is not literal. I don't know if you guys can see that. I want you to see the boxes right here that I drew on the daily, and take a look at what's happening right here with the candlestick. Take a look. You can see buyers are trying to step in. So all we need is about 30–40% of this to be retraced. Maybe it'll happen on this candle. Maybe it will be the next one. When you get down into these zones, that's what you're looking for. So right now, we're just staring at it. We're just waiting for this to develop, and there we are. We're in the green. I don't know why I keep calling it green. My apologies. We're in the gray. Let's see. See it? See the wick? All I want you to do is see the wick. Now let's see if we get that reversal, and we will be in. Now it's just a matter of patience. This thing will probably bounce pretty aggressively back up towards the top. Now take a look. Once you got into the gray box, see? You can start to see the wick developing. Buyers are slowly sneaking into the trade. Okay, skipping forward to the next 5-minute candle. This is exactly what you need to see. Take a look. The next bar, this would definitely be a very premature power of tower. But here's how this trade develops. Number one, you come into the zone. The zone is the key here. That support on the daily is that maxed liquidity, okay? So we are in this one long, by the way, 72.89. 72.89. So this zone is what makes this trade work. Next candle comes in. We retrace about 30%. Right? That's a little bit early, but the stop is easy on this. And here's the point. If it takes us out, it takes us out. And we're just going to lose. I mean, you're going to lose every so often anyway. And the point is not to lose a lot. So what we're looking for here in terms of targets is somewhere on the top of this bar. This is a pretty deep bar. So if you wanted to scalp, I could say that any move up in here would be a good target. I've got this one up here. I feel like it wants to get back up to the support breakdown. You know, as they say, previous support becomes future resistance. So let's kind of see what happens here a little bit later. So here we take a look at Palantir, exactly what we want to see. We've exceeded our target, so I'm going to go ahead and close this one out. Going back to the origin of this move, it was all created by that power of tower. Even that double wick formation is really where the key was. But not just that, is that it happened in the zone. Okay, so now I decided to go short in this trade. You'll see here from 75.57. And hopefully you see exactly why we decided to go short on this. You have the John Wick candle, okay? But I also want your eye to focus on something else. Remember, early on, we drew this line over here, marking this previous level of support, which now has become resistance. And the moment we break this resistance, much of this can get back tested. And if we really look closely at this candle right here, you have yourself the anatomy of a John Wick. Take a look at the candle. And then the break of the base of that candle, stops can be placed up here. If you're really aggressive with risk, you can place it up there and kind of back test some of this. Now, because this move is happening a little bit later in the day, maybe target this VWAP area to somewhere down into this level back here, just trying to get some sort of fade back into the zone. So for the sake of time, I just moved forward towards the end of the session, and I covered up that short right down here as it started to break this range, and the total take was 2 trades, 2,210-ish. So very good, but the point is understanding the process. You know, the money's irrelevant. If you get up every day and you focus on the process, the money will come. And what we wanted to see here is there's actually another trade available via that system. I did not take it. But if you look over here, as you started to accelerate right back up into that level, take a look at what happened. You got a power, a tower there that led to another sell-off. And again, another power of tower down here, which at this point would have grinded you up for a few more bucks. But here's what you should really see here. This is important no matter what you're doing. The philosophy of all of this video. These pivots took place in a predictable zone. The first one took a place down into that daily support. Otherwise, trade would have been invalid. This one took place at the resistance as it accelerated through resistance, which made it a valuable trade. This one right here, this line was drawn very, very early, and it comes into play hours later. You see how important these levels are? And the retrace was almost all the way back down into that zone. So if you guys can remember the box theory, one of the very first videos I've done on this channel, by taking the very top of the pivot and the bottom of the pivot and then boxing it in. That's a terrible looking box, my apologies. You see it just went from one to the top, down towards the bottom, up towards the top, down towards the bottom, and you can keep anticipating those ranges. So wrapping up this video, just first start by looking at those candlesticks and then looking at the zones they're going to develop. It's not that complicated. It's just a process of understanding how markets work, where markets tend to pivot, and the attitudes that they have. And when you put all that stuff together, everything should look good. Now, what I want to remind everybody here real quick is, as always, what I want to remind everybody about here real quick as I close up this video is that every week we produce a watch list of stocks just like this. And we're going to start producing a lot more and doing some additional private videos. All of this stuff is free. It's on the website, therumors.com. Feel free to go there. Just sign up for it. You'll get an email every week that'll lay out a bunch of different opportunities, a bunch of different levels. As always, if there's something that you want me to talk about specifically in these videos in the future, feel free to bring them up. As always, it's my pleasure. Hope you learned something today. Take care. Trade well. Cheers.